guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about the absolute best swing trading routine that I do every single Sunday to ensure that I'm going into the week with some sort of game plan or approach. I always imagine the week ahead like a football team ready to go into the Super Bowl. What I mean by that is they have an offensive playbook, a defensive playbook. If things are going right, what are they going to do? With the stock market and trading, you have to have that same approach. Most wins are done in the after hours. And what I mean by that is that's finding those opportunities, that's setting those alerts, that's understanding the positions you're in on. If things go right, what happens? If things go wrong, what happens? So I hope you guys all enjoy this. Smash that like button and subscribe if you guys like trading and investing videos. Also, if you guys want to learn more about trading, we have an awesome school. It's called the Swing Trading Masterclass. It's an 8-week course, but you guys have lifetime access to it. We have private live streams, quizzes, lectures, a group chat, but more importantly, we actually teach you to trade, which sounds crazy, but there's so many scammers in the trading community. So we literally separate ourselves from everybody and we teach you how to find the stocks. We don't do alerts. We teach you how to set up your scanners to find these opportunities. And we have an awesome sale going on for 51% off. You guys can use code SPRING25. It's our spring sale. So make sure you guys check it out down below. And we only have about 8 spots left for that code. So if you want to elevate your trading game, check it out. And guys, let's jump into this. So the first thing that you guys need to do if you guys are, starting out with trading is to actually, like I said, have that routine. So the first thing that I do is review current positions that we're in on. We're in on VU, and kind of the approach behind this one is we're averaging down as the market sells off. Now, the reason I say that is because this is one of the best things a trader can do. And let me show you why here. This right here is the S&P 500, which is also VU, when it's 25% more down. So you guys can see very rough time during the decline, but after 1 year, the average return is 21%. So if we can average down during, the decline year, when the market recovers, right, we look at a really, really nice return. So as VU continues to sell off, anything over 6%, we double what we put in. So now here, as the market sells off, right, like it's been selling off ever since the break of the 90-day moving average line, we've been averaging down. Okay, we also averaged down a bunch when it broke out on the hourly chart right here, giving an average price right now of near and around the 520 mark. So that's our average cost. And as this sells off, guess what? We're going to continue to average down. I know the long-term game of VU or the S&P, so I'm very confident. With a variety of these other ETFs like QQQ, with Visa, with Amazon, we are doing the exact same thing, averaging down, and as they break out or sell off 6%, we double what we normally will put in. Same with Google. One of the more recent actual swing trades, so to speak, is going to be ticker symbol GILD. Now, we'll talk about this one here. And this one here, looking at the chart, is we have this beautiful, beautiful upward trend where the stock has gone from lows here at about $70, highs at 120. So it has great growth. Now, I want to talk about the broker just for a quick second. The broker I use is Moomoo. They're absolutely fantastic. They're the broker I highly recommend. You guys can get up to 30 free stock just by signing up. So it's completely free to sign up. So just sign up, use the charting, use the broker. They offer fraction shares and paper trading. So if you're just getting started there, but let's go back to the stock we're in on. So before I ever place a trade, the first thing I look for is that trend, $70 to 120. Great buying pressure in a year. After that, what we look for is support. So if we look close, we can see this blue line. This blue line is what we call the 50-day EMA line. It's a moving average line. This acts as trend indication, but more importantly, support. We can see in the past where it's hit it here, and what happens? It hits it. We have buying pressure, right? Even back in here, right? Sells off to it. So now here, as the stock sells off, right? It hits that yellow line, which is that 50-day moving average line. So then we look at the RSI. The RSI here is trading for a 38. The last time it was trading for a 38 was back in here where it hit that, 50-day moving average line and had great buying pressure. So now let's go ahead and go over this again. We have a stock on an upward trend, sold off down to that 50-day moving average line. It's undervalued on the RSI. And then going to the hourly chart is very important because you want to get in on some sort of breakout. And that's exactly what happened. We got in on that breakout. The stock's been rallying up on the trend, and we had a risk and reward of 5.8. So meaning we are risking $1 to make $5 and 82 cents. So if you guys are starting out with like $1,000 and you find a stock like this, maybe, 30 times over the course of a year, risking about 3% with a 5-to-1 risk versus reward, you're probably saying, well, Carter, you need to be profitable 90% of the time to make money. Well, imagine this. Imagine you're only profitable 30% of the time. So 70% of the time you lose money. Guess what? At the end of the year, you've turned your $1,000 into over $1,800. That's a return of 85%. So now you look at it and you go, well, risk management is crucial, and absolutely. So right now we're just keeping our stop loss just below this trend line. So if it dips down, we'll just take our profit and move on to other opportunities. So, we have our stop loss there set, and that's why having a routine, understanding the position, understanding the trend is crucial. The next thing we do, this is kind of our, defense, since we're already in the position. Now, how do you find plays? So you want to use like a stock scanner. I already did the deed and, I'm scanned for the plays. So one of the stocks here that we're looking at is going to be Meta. Meta here has some nice hourly support where it hits it several times. So we could see a move from like 576 up to like $600. If you keep your stop loss pretty tight, it would have that good risk and reward. And looking at that daily time frame, it's approaching that red line, not the yellow, but the red, which is a 200-day moving average line. So it's a very, very hard support. The last time it was trading there was all the way back, right? Was all the way back in here in mid 2021 where it hit that moving average line. So we could see a nice move here, and Meta is a blue chip stock that you always could average down on. Another one here is RL, also known, I believe this is Ralph Lauren. You guys can see great buying pressure, recent support in the past of hitting that red line, hitting it, getting good buying pressure here. So now sold off, hit that red line, got buying pressure, sold off again. So one of the issues we see with it is the trend is still down. But if we look at like the hourly chart here, we could draw out that trend for a breakout, which would be above here. So we'll just throw an alert there. And if it gets some buying pressure, we always could get in on this one. This is ticker symbol ERJ. The daily time frame is hitting that 50-day moving average line. You guys can see in the past it hits it several times. Stock sold off down to it, undervalued RSI. Now we're just waiting for a breakout of above 46. We already have an alert set there, but still is very important. Another one here is GDS. GDS here, what do we have? Well, if we zoom out, we can still see this general downward trend like such, right? Also, the trend is like this. So really for this one here, I would prefer to have, the breakout of above 26. So we'll just throw an alert there. And the reason I did that is because of the trend is very similar to like this. So 26 would give us, above that 50-day moving average line. Then we got ADEA. This one here has been very volatile. Looking at that daily time frame, this one here is selling off. And when a stock is like in between moving average lines, yes, we could see a move going in that direction. But given this huge sell-off here, we're just going to throw an alert below 12, or around 1280. So if it sells off down to that 200-day moving average line, we'll be notified. And then the hourly, you guys can see it really isn't forming a trend. It had that trend going in this direction, small breakout, nothing too crazy. So we'll just leave it alone for now. If not delete off the list. Another stock I really like here is ticker symbol DX. DX here, looking at this, it popped up a little bit after hours. But, one of the things that I do think is important here, look at that daily time frame, heavy support on the blue one, which is the 90-day moving average line. Hits it a bunch in the past, as we can see, several times. So it sells off down to that point. Now, when we go to that hourly time frame, it does get confusing with this, right? Popping up. But one of the things you guys can do is change your extended time to do not display, and it'll make it a little easier to draw out that trend. And now you can move it down a little bit like that. Throw your alert above 13, 18. So if it pops up, you'll be notified there. And then you always could add it back. Doing that's pretty important here, and I always highly recommend it. We got a couple other ones that are pretty volatile, though, that still need, some time to pan out and kind of wait. But this one here is another one here. So, that's the trading routine that I do. Yeah, it takes me 15, 20 minutes, depending on how many stocks that I find with opportunity and how many stocks that we're holding. But overall, doing your research, scanning for plays, and trying to be the best trader you can be is going to be what separates you from other traders. So, guys, I hope you guys all enjoyed this. If you did, smash that like button, subscribe, and don't forget to check out our school. Code SPRING25 for 51% off. So I'll see you guys in there. And then don't forget to sign up with Moomoo. You guys can get up to 30 free stocks. So I hope you guys enjoyed it. Like, subscribe, and take care.